then the Bitcoin price might start to move the electricity price. And this can then impact households. An AI might be able to think outside the box of what we cannot see, but we might recognize it just as a mistake or failure. A lot of encryption starts to be changed into something which is quantum safe. And there is another algorithm which tries to give a solution for that, which is Grover's algorithm, which came about 2 years later in 96. To this openness is also the question if Bitcoin stays at 21 million, right? There are already discussions of adding 3 zeros to it to make it easier because the price has gone up so much. So what if the Bitcoin price drops to €1 tomorrow for some reason? Like some whales decide we had enough, we're going to sell. And dropping to €1 is not unrealistic.
Quantum computing has shifted from science fiction to a real force that could reshape security, finance, and even Bitcoin's future. Meanwhile, AI dominates the headlines, and Bitcoin energy use fuels debate. But the real story lies in the hard work happening far from the hype. Today, I'm joined by Patrick Fodor, co-founder at marbl, a company focused on energy assets optimization. In this episode, we will explore the risks and opportunities quantum brings to Bitcoin, the messy realities behind AI trading, and the crossroads of crypto and energy markets. Thank you for coming today.
Thanks a lot. Thanks for the invite.
Patrick, let's start with your background. How did your path lead you from finance and trading into co-founding marbl and focusing exactly on energy markets?
Thanks a lot. This journey has been quite long, extremely interesting and exciting, and I'm having this opportunity now to share with everybody, so I'm really happy about it. I started with physics here in Vienna, studied physics for about, a little bit too long, maybe some would say. And while I was doing that, I was going through experimental physics, theoretical physics, and then computational physics. So physics now has 3 branches, basically. I focused on the computational part in the last part of my studies. And then I joined a company which is doing trading on various markets, NASDAQ, ICE, and so on. And I was developing the first trading strategies in Python about maybe now 14 years ago. It's been quite a while. And after that, I joined a company here in Vienna called Visotech. And Visotech was that time an innovative company creating trading strategies for the intraday market, the power markets. And we were one of the first companies to be able to put these kind of trading strategies into production in a world. The energy trading was not that innovative and is maybe not known as the most innovative world out there, but things are changing very rapidly. And as time has passed, I noticed that energy trading is a passion of mine, and I really enjoyed that. I enjoyed the team. We've been continued building, improving trading strategies henceforth. And so after Visotech was bought by Trayport, I started to do team leading there and leading an algo trading team. Then I joined eStar about 2 years later. And last year we founded marbl, and now we are focusing on a very special problem, which is optimization of energy assets such as batteries, solar, wind. How can we optimize all of them on different markets? We will talk a little bit about this later, but this has been my journey, and it's been a very exciting one and a very messy one in terms of IT. So thanks a lot for giving me the opportunity to talk about it.
So the crypto energy crossover is heating up, or even Bitcoin energy rate crossover is heating up mostly. What is your take on this, and what's actually being missed in that discussion?
So crypto, I've had a very interesting relationship with crypto since about 2015, 16, when it started to become more popular. Maybe you remember the first cycle, and then 2020 another cycle, and so on. So I've traded Bitcoin. I've gained experience in smart contract development as well around that. So this is my take on crypto and the energy market. It has been heating up in the last years and become more popular about it. The topic of energy consumption of Bitcoin especially has been always basically on high on the agenda for a lot of people. For Ethereum, it has changed a little bit since the change to proof of stake, which Ethereum also is advertising a lot for the communities as a low energy variant of blockchain technology. And so what is being missed is, I think, the coupling. So what Bitcoin is starting to bring about for energy prices. And how do we think about energy itself as a commodity? Energy is something that nowadays we could not live without. So it impacts everybody. It impacts businesses, households, private people, big companies, businesses alike. And what happens if a highly developed society must go without electricity for some times? We have experienced 2011 after Fukushima in Japan. So I've been there in Kyoto just at the time, and Tokyo or Japan that time, about 50 nuclear power plants decided to shut down all the power plants, and Tokyo had to ration electricity, which impacted restaurants. You can imagine all the freezers and so on. When we couple a commodity this important to something like Bitcoin, then the Bitcoin price might start to move the electricity price. And this can then impact households. Like, do we as a household then have to compete with the Bitcoin price when we want to fire up our refrigerator or fire up our personal computer? Everything is interconnected. And this is something I would like to talk about more today. I think this is something that might be missed a little bit when we talk about Bitcoin and energy. And just a second point, Bitcoin is an excellent flexibility provider. So what we see as well more and more, there are companies who've been doing this for years, of course, but it's coming a lot to the surface, is how can mining operations may be used as a flexibility provider for reserve and frequency recovery and restoration markets. And this is also becoming quite popular nowadays. So this is also something that's coming up.
Let's elaborate on the Bitcoin's mining and on Bitcoin mining and energy, right? Their connection, basically both on the bad and good sides, right?
Yes. So Bitcoin, I mean, there are people who, for example, would import miners to a lot of countries, and I think you can compare it. Maybe they as well talk about it a little bit like selling the shuffle in a gold rush. Right? Because you're giving people the miners and you're making the argument that looking at a certain market, now focusing, for example, in Austria or Germany, when you have a lot of photovoltaic on your roof and you're producing electricity at times at noon when we have an abundance of it, what do you do with that? If you put it to the grid, maybe it might be detrimental to the grid. Maybe you're overloading the grid at times. So it is better if you don't do that. And if you now combine PV, for example, with a Bitcoin miner that runs at the time, you could use that electricity to do something helpful for the grid. I think here we have to distinguish by region a little bit, because there are regions with high abundance of electricity and energy, and there are regions which fight with energy scarcity. And in Europe, we are in a region with energy scarcity, which means that we might have an abundance at noon, but we lack the energy a little bit later. And when you look at the energy charts, so there are really nice websites like Smart and so on, where you can look up every single day how much, or every single quarter hour actually, how much energy is produced by which kind of source, what consumption do we have, how does it impact the prices. With the rise of batteries now, we see that these kind of spikes downwards start to disappear and broaden a little bit. Batteries catch these spikes and then they shift energy to other times so people can use it with different prices. And this provides it for other people. If you go into a region with energy abundance, maybe USA a little bit more, Russia, certain regions a little bit more, Chile has huge amount of solar energy. If you don't have this energy scarcity, I think Bitcoin can shine even more in those regions.
Then next question would be, if the energy market is focused on efficiency and grid balance, how close is Bitcoin to being a part of that solution?
So, in my opinion, it might help a little bit, but the problem with Bitcoin is, in the first place, it's an energy consumer. By having more miners, you're not going to create more energy, give more energy to the grid. Now, the question is, the energy consumed, is it worth it, right? Like, do we create the value with that energy that we want to get out? And there's a lot of comparison done to AI data centers, like, okay, but we have the AI data centers, they are going to use up gigawatts, which is a huge amount, like what Meta, Facebook is trying to build in the USA. And here we have to balance a little bit. So what is the worth? I think we will talk more about Bitcoin, that Bitcoin can bring to the community itself. Like, is it worth the mining? And is it worth the consumption of power or not? For Europe, the way at this moment, is to store the energy because we need it. We need something that generates it. And until we cannot go to a place where we can fulfill like high amounts of the European energy to be covered by renewable energy, to make Europe independent of outside sources, gas imports, coal, natural oil imports, this, I think, should be, it's a political point, but my personal opinion, should be a focus of Europe to make themselves independent. We've seen what happened with Russia. We see what happens with USA. And Europe being dependent by energy source makes them also dependent politically. If we manage in Europe to become independent, this can make Europe as a global player stronger again and give us a stronger voice. Bitcoin is not helping that at the moment. So at the moment, what helps that is pump storage power plants, batteries, everything that makes sure that the energy we produce, we can use when we need it to reduce the imports. Once we reach the level that we are self-sufficient, it's easier to also go into Bitcoin and other sources that we might use for other reasons. But I think number one of the goals of Europe must be at this moment in time, which is very volatile globally, to become independent from other outside players.
And what do you think would be the best way to do that?
So the best way, I mean, it's also my passion, the energy markets, and I've seen it develop over the last year, is to have a very efficient energy market, invest more in transmission lines, invest more into renewable energies, don't politicize heat pumps so much, what we see a lot in Germany at the moment. Maybe also progress a little bit more on the vehicle-to-grid transformation. So there's something going on where when you have... so a typical household in Austria uses about 10 kilowatt hours of energy per day of electricity. In Hungary, about 8. USA, about 25. So Austria is not that bad with energy consumption. A typical car battery, do you know how much it has? About 70 kilowatt hours. So you could power a household for 7 days if you could access the electricity from the car. And vehicle to grid is one step further, where you say, okay, like if the grid has certain imbalances or fluctuations in the frequency, we can now aggregate 1,000 cars and take the electricity from their batteries to stabilize the grid. So there's like a huge pool of flexibility or battery storage capacity that could be available if we technologically advance and also legally advance a little bit, because there's a lot of legal implications when you now start to connect a lot of things to the grid. Also, a lot of batteries trying to connect to the grid, but every connection has to be checked. How much does it destabilize my grid now? So putting a lot of effort here, moving things forward here, that we can strengthen the European grid, will bring a big social benefit, I think, to all of European citizens here.
A lot of people talk about AI in trading, but how much of that actually works in practice?
Yeah, this is a very interesting topic, because you see a lot of companies advertising AI, and we are an AI-first company using AI for trading, whatever AI they are referring to. A lot of times it might be some optimization algorithm running in the backend. However, the problem is that the trading world is very messy, right? So you have outages which happen. You have network outages. You have issues with your servers. It doesn't matter which data center you run. It happens once in a while that a router burns or a connection burns down. Once we were running something on a server in Finland, and maybe you remember in the news a few months ago when underwater cable was cut by a boat, which was connecting servers between Finland and Germany. So suddenly our connection was lost.
Mm-hmm.
So you have to deal with all of these problems and issues. AI is very good in recognizing patterns, and especially neural networks are very good in interpolating. So you have a data set and you learned maybe a lot of behavior that you've seen. And now we are getting a similar pattern in the market, and my neural network will be able to give some signals based on that. But exchanges change, milieus change non-stop. So for example, the exchanges we trade on, like Nord Pool, Apex for the power intraday market, sometimes they say, we are going to introduce something to throttle trading because there's too many orders coming in. So now you have a completely new milieu that you are trading in. Or they say, instead of trading hourly on the day-ahead market, we are going to trade quarter hourly. So again, this is a big change. And the big bulk of work has to happen in this connectivity, right? So how do I connect up to all the exchanges? Regionally, there might be different exchanges. We talked about the frequency market very briefly. So the frequency markets, there's now a movement in Europe to unify it. But in general, every region has its own transmission system operator, TSO, who are managing the grid and making sure that the grid is stable at 50 hertz. And all of them might have different requirements how you communicate with them. So making sure that you can communicate with them, be reliable, be consistent with your trading operations is like almost 90% of the work that has to be there. And then the AI is the cherry on the top, which says now instead of making 200,000 per year, we can make 250,000 per year. But getting to the 200,000 is really hard in the first place.
And you mentioned that, routers burn and connectivity just, breaks one way or another, sometimes quite manually, right? When the wires are cut by the bots and so on. How do you deal with this kind of problems?
So this is something that needs a lot of experience because you don't see them a lot of times. Maybe you see them once a year. Sometimes when there's a change, you might see it more often. People might say these days we see it more often on certain exchanges and with certain providers. So your trading strategies have to be prepared for it for once because there might be a problem with connectivity. Connectivity comes back. And if your trading strategy thinks, okay, I was planned to fulfill a certain position every 15 minutes, and now I haven't for the last 3 quarters or 3 hours, now I'm just going to drop everything right now to catch up with it. You might start moving the market, if you have huge quantities, and you might be classified to be a market manipulator even. And once you gain this experience, think about it, you know how to create and design your strategies to be prepared for that. A lot of times, we also see this in crypto, by the way. Some learnings from the past get forgotten. So when I see newcomers coming into the business, they tend to make the same mistakes like newcomers 10 years ago made when they started to create these operations and the trading strategies. But what we try to do is to take all of these into account from the start. Also, when we do testing, that's something that I think came from Uber or Netflix, where you start to do something like chaos testing. You have maybe a smooth backtest where you test on historical data, which doesn't have any gaps. But then you just put some things in your backtest where you say, okay, now for half an hour, there's a gap. Nothing happens, even though the strategy is still running. And then when we come back, what happens then? What happens when we make a sudden change in something? So simulating that I'm trading a wind farm, and I always have to look at what am I going to produce in the next 15 minutes or next hour? And then I'm putting it out in the markets. if the wind suddenly changes and my position changes, maybe my strategy is not equipped dealing with that. So this is also something that we can make tests for. And these are all the things that we try to do like ahead of time. And then when it comes to running your trading strategies, every serious trading company that I've seen and that I've talked with has implemented monitoring, alerting around this, letting the people know that something is going wrong at the moment, that manual intervention might be needed. And so complete automation right now is not 100% there because these kind of outages might happen, manual intervention might be necessary. And even regulatorily, it might not be 100% possible for AI, because if you look at the EU AI Act and the regulations they put in for critical infrastructure, so if you have an AI which is involved in electricity supply, water supply, anything related to critical infrastructure, it will be defined as high risk, except there is this HITL thing, the human in the loop criteria, that your AI is doing just something specific and then a human has to approve it. So there are a lot of boundaries and constraints on using AI, using complete automation, which come from natural or legal side that bind us. And so also at marbl and at partner companies, we go to the extent as far as possible to automate and give ease to the people. But there needs to be somebody who has a check on it and who can jump in if something happens.
You said AI is often just shiny stuff on top, right? What's the unglamorous part that actually matters?
Yes, the unglamorous part, looking at all kind of message formats. Nord Pole is communicating with a different message format than Apex does. So either you have to write and translate to your system how XMLs are created and read, how JSON messages or Stomp messages. There's so many formats. And as companies have grown over the years, some companies tend to just keep what they had 10 years ago. So now we have to develop against APIs that were developed 10 years ago, and they just had a lot of other things added to it. And so maybe some of the viewers know SOAP and REST APIs and the hardships that come with that for developers who need to implement it. So APIs break, right? And you have to adjust all the time. So the idea of you build one system and keep it running forever, it doesn't exist. IT is something that's evolving nonstop, just like the AI part has to evolve. But usually the effort in making connectivity and making the surface nice for the end user, the work behind the scenes is huge and immense. Making sure that your database is always correct, that the schemas are correct, that you can scale properly with the amount of users coming in. You also don't want to scale too much because it shouldn't be too expensive. It should be also affordable to the users. So what value do you create compared to all the resources that you're using up when you're creating your IT systems? And finally, something which is coming up a lot recently is IT security. That has not been on the radar a lot about 10 years ago, and now it's getting more and more into the consciousness of people, especially in energy trading. I guess as well in crypto. I've been talking about smart contract hacking and smart contract security for a few companies. So this is coming a lot into the energy trading world because we see attacks from outside. We see adversaries such as Russia trying to hack IT systems here. And if the viewers are interested, just look up Chaos Computer Club and what can be done with the energy grid in Germany. There's a lot of vulnerabilities out there, and the hard work, where AI is cherry on the top, is making a foundation which is very stable and strong to then carry the smartness and intelligence that AI can bring to the game.
What does it really take to set up an algorithmic trading company such as marbl beyond the model and strategy?
So you need passionate co-founders who give it their all and who are aligned with their mission and their vision, what you want to do. That's not very easy to find in general. People have priorities in life, and but to have this dedication, determination to go for it is extremely important, because you're pushing each other forward and you're pushing each other towards the same goal. Apart from that, when you start out, maybe you find a problem that is interesting to you. You will find competitors regionally, internationally, out there somewhere. And it is important to decide, with who do I talk? With who do I share my experience? Maybe they share also with me. Where do I behave a little bit more careful to cover myself and also to cover our IP? I also have a responsibility for my co-founders, right? So I might be a founder, I might feel entitled to talk about what we're doing, and because it's exciting, but we're all in the same boat. So I don't want to sink it by giving away my secrets just because I want to have an exciting conversation with somebody. And so there's a lot of constraint and self-governance involved in the founder's life, apart from curiosity and reaching out. And then technically, you need to understand where the world is going, because there are these startups, unicorn startups, that make it within a very short period of time, few months, maybe a year, they go to multiple millions yearly recurring revenue. However, most startups don't. Mostly takes a little bit of time. You need to find your product market fit. So it needs some perseverance that you keep going forward and you find that fit. And then technologically, to find out where is the world going to be in about 3 years. What's the technology that I can start using now, such that I build up the competence that when all the other pieces align, we can start going with that. And this is where the advantage is compared to being corporate and being already in a structure where the technology is set, what they used 5 years ago, we just move on with the same thing because it's successful. And that's how you can overtake them. Right, and I like to think about this the horse race paradox, where if you have a horse race and there are horses with consistently finish in the top 5, and there are horses with sometimes outperform completely and sometimes completely underperform. And so if you always bet on the consistent horses, the chance of you being the number 1 is very low. Because you will always be in a very good middle field, but you will stay there. So you need to take the risk sometimes. And making a startup is something like being a very volatile horse with very volatile performance. And you hope that with the alignment with the co-founders, with the partnerships, friendships, and networking that you build, you can set yourself apart. And the technology is a very essential part of it. It might not work out, but if you want to make it work, it's really good if you have something that might give you an advantage later on.
When you are building an AI product, what does it take to make it something more than just a flashy demo?
Reliability is extremely important, and usability. So what we also see more and more now is how UX gets integrated and front-end developers get involved into UI or AI products, because we now have all these AI services available, like OpenAI is providing, and more with these free open models that we can just use ourselves for free. It's more becoming who can give a better accessibility to the AI model in the background. So it's not necessarily the AI model per se anymore, but how can we make the best use of it? So the main players are not necessarily the developers of the AI model, but the people who can make a nice app around it, and give me my health tips, for tomorrow.
Productize and market it and sell it. Really.
Exactly. So, or how can you give me nice legal advice?
Yeah, exactly.
And because the models, they're so knowledgeable already. If you can make RAG or anything like this to give it more intelligence about your specific problem, a lot of times it can be extremely helpful already. So the main players are how we can democratize the use of it at the moment. And this is also something that we in marbl concentrate on, and a lot of other companies concentrate on, this connection and building the bridge between the models to the real world use cases. So it can be at the hands of everybody. And this is extremely important. On the other hand, we still have issues with hallucination. What if you give AI inputs that are completely different what their training data was?
Problem with the context, keeping the context right, and producing the results consistently, right? Do you think it's even solvable in the foreseeable future? Because there are so many people who are into AI, and they are computer science majors and everything, and they're writing that it will always hallucinate, or at least like next 10 years situation won't change much. Maybe it will be faster, more efficient, and so on. And there will be a lot of AI agents, right? So which could be connected, and then the context maybe will be held in a way, because it will be just for you, and this or that concrete task. But do you think that in general, is there a chance that it will be improved?
It's improving constantly, so there definitely will be improvements to AI, will be improvements to hallucinations, and so on. Also, what you have to take into consideration, AI develops gradually, but it also develops in steps, right? So the last big step, which brought about this revolution in AI with ChatGPT and everything, started with a paper in 2017, Attention is All You Need, where they introduced a technique about how you can make text input or sequential input and the AI not forget what was given to it in the beginning, right? So if you look at the development evolution of AI and sequential ideas how to process sequential data, we had recurrent neural networks, we had LSTMs, long short-term memory models. And then they always had this restriction of, when I add more text to it, it starts to forget what was in the beginning. And there was a lot of experiments. How can we make sure that it remembers the important stuff of it? And 2017, the paper Attention is All You Need gave an answer to this. How can we make sure that we can give bigger context, bigger text to it, and it just will remember, make the connections of what is important from the text to answer your question correctly, so when you write a question, but it actually is doing is just continuing the text, right? And so what do I have to write to continue the text correctly after this question is set? And so we don't know if there will be another step like this, like the 2017 paper, where we find out another great idea that will make another jump in AI so that AI can learn more. So that is one part. There might be like another quantum jump, quantum leap coming, which we don't know yet. Another thing which is constantly changing is the size of the models and the training effort that we put in. So there are also something like neural scaling laws, which dictate how good can a model become based on the number of parameters that it has and based on the number of effort we put into training. And just by giving it more data and increasing the model, will improve the outputs at the end. And so there we will hit a limit at some point where all human knowledge is exhausted, but it can generate new findings and knowledge. So it is quite open. There will be a lot of advances in AI, and there will be, of course, a delay between the paper coming out and it being available to people. But I think we are far not at the end, but also far not at general intelligence as well. So somewhere in the middle.
Exactly. And since you have mentioned general intelligence, what's about that? What about that? Do you think that we can expect it, if not by 2030, but then at least by 2035?
Yeah, very hard for me to say, depending on who you believe. We have very public voices, Jeffrey Hinton talking about it, Elon Musk talking about it. So my take is basically what we are doing is we're training a system on specific data, And when we train, there is a certain thing called the loss function, which says like how far the model is off from what we desire it to produce. And so we are directing basically the model to adjust its parameters so it produces desirable outcome. And the general intelligence, there's a lot of definitions to what it is capable of doing. Will it be capable of rewriting this loss function for itself? And because it wants to reduce it, so it just creates another loss function. Or will it improve itself? It is very shady for me at the moment and foggy what exactly this will be. There's a lot of imaginations that this general intelligence will be our life partner, being around us, helping us with life decisions and making our life better. But in the end, an AI always wants to reduce the cost or the penalty that it gets by giving bad answers. And once it can define this loss function for itself, it can also say, okay, the best action I can take is just doing nothing. And it reminds me of a book by Stanisław Lem, a Polish writer who wrote a lot of books in the Cold War. And he wrote about the Soviet and the US blocs. And he wrote that at some point when all the weapons are developed, we have the perfect nuclear weapons, we have the perfect shields in defense. At some point, the problem will be the political decisions. So we need to find faster political decisions. And the conclusion is we replace politicians by AI to make the decisions on war and peace by the AI and also all decisions of war making. So they create an AI, and there's like a race to create the better AI that can make the better decisions in war. And at the end, one of the parties decides, okay, we're going to wake up now this AI, and it should tell us what to do with our adversary. And when they wake up the AI with an IQ of 1 million, don't remember the correct number now, the AI says, you're absolutely insane. I'm not going to fight for you because what you're going to do is just going to make damage to everybody. Right, so an AI might be able to think outside the box of what we cannot see, but we might recognize it just as a mistake or failure. And what do we do with it then? So it's very interesting, and we will see.
There is certainly a difference between selling a project, right, and building a product. So let's come back to that point. How does that shape whether a company actually scales?
Yes, so this is always a big decision, especially when you create a startup. Right, in the beginning, you might have one customer, and the customer has certain requests. And then there is a decision of, okay, like we have a vision that we want to do, but if we do this one more thing for the customer, we get revenue and we can survive a little bit longer. And do you become then a project company that is fulfilling a project which is the vision of another company? Or do you at some point then say, no, this is our product and this is where we go. If you look for that, you have to find another provider. And this is a very difficult decision to make in the beginning because it can impact the survival of the company directly. And your co-founders might have different opinions at different stages on this. For a long time, I've been doing a lot of projects. So I've been developing AI projects for other companies in computer vision or detection. And this is something that won't feed you in the long term. It's good for once or twice, but if you really want to make something work, you need to at some point follow your vision, and people will then buy into it if they see that you focus it and you become the best at what you're doing. So this has to be in the end the key to making a business work.
We've touched upon the topic of startups and startups building. So why do so many builders overlook the boring but so much important and essential parts such as IT, legal, finance, and even compliance at times, right? When chasing AI, automation, and so on and so forth.
So when you buy a car, what are you looking for?
It depends. It depends on what my values are. In my case, I'm not a car guy, so for me, I'm looking for the looks, for the comfort, of course, and the comfort of the driver, right? Because I'm going to drive it.
Yes. And if you think about when you look at a car, how much of the work when you're building a car is about the looks and the seat and the comfort. and how much percentage is the gears have to work properly, the engine has to work properly, and all the tiny stuff. You see that basically what you look for is in general a fraction of what really makes a car. And because you just suppose any car maker should have this done. This is the basics of a car. When you put it to drive, when you put the gear on, it should go forward. It should have a rückwärts. You should be able to go backward as well. You're not going to check it. But making it work is still effort. So as time moves on, the bar is raising. And so for every startup getting into the field, the bar is getting higher and higher because the players on the field, they already have this done. And this is the huge advantage for bigger companies that have been in the field for a longer time and have become like the industry standard. As a startup, first of all, you have to cover the standard cases. So you have to catch up with all of them. And then you have to improve on top of that to set yourself apart. So, and what you're advertising is not, I can do everything that the others also can do. My systems are not going to crash. Who is going to buy a car that you say it's moving? It's not a selling argument. That's the same thing with IT and AI as well. You want your USPs, your unique selling points to go out, and you want to show the people how much more ahead you get when you choose me, how much more satisfaction you get out of our product compared to other products. So, for example, with marbl, we have to focus on what you can get out of our optimization. We are not going to focus on what kind of databases we're using or where we keep data or that you can interact with us with an API, because that's like a given for most of the companies. But the outcome is what matters. That is the comfort in your case, basically. And this is really important. That's why we focus it, because this can become the selling point. And I think this is also something that a lot of people are then chasing. And what the problem with that is that you get a lot of companies who then try to outbid each other and selling features which they might have maybe in 1 year, 2 years, 3 years, putting the developers under pressure to get things done. And this then becomes a little bit problematic, because there is this race who can outbid each other more. There is once in a year, there is a big energy conference called eWorld. It's usually around February, March, where a lot of energy companies from all of Europe come together, and a lot of salespeople then have this bidding war of what kind of features can they present now. And a lot of times, a lot of those features might not even exist at that point of time. But this is just how things have developed, and startups have to adjust to that. Because if you as a buyer here, company A offers me, features A, B, C, D, and then you as a startup offer me D only, I'm not comparing in the sales talk if it's really implemented or not. It only comes out usually 1 or 2 months later after I sign the contract or a trial period that, actually, this company actually doesn't really have it, and they tell me I have to wait 6 months. So there is this balance that people have to strike, and I tend to try to not overpromise. But in a very competitive field like this, some startups feel themselves compelled to make a case and talk more about their vision than what the product is at the moment. And fortunately, some buyers support that and say, I'm willing to wait a few months, but I think you're doing a great job.
And I think the same applies to people as well when you are hiring them or trying to collaborate. Yeah, a lot can be revealed in 2 months, and it's almost all the time, if not completely, then at least partially different from whatever has been presented at the very beginning, right? Yeah,
exactly.
Let's talk about quantum risk and the Bitcoin. What are people worried about when it comes to Shor's algorithm and Bitcoin security, and why?
So Shor's algorithm is not a new one. It's been around for about 30 years. I think 1994 is about when it was designed. And Shor's algorithm's basics basically is how can we factorize integers, And why that is important is because when we look at public key infrastructure, something that Bitcoin uses, but also all encryption on the internet is using, is based on that cryptography. It means you have a certain private key, and you can share a public key, basically, with which others could, for example, check and verify if a message really comes from you. The private key remains basically only in your hands. With Shor's algorithm, and if factorizing huge numbers into the prime factors was easy, then a lot of encryption wouldn't be safe anymore. So there are different types of encryptions like RSA and ECDSA, so elliptic curve digital signature algorithms. And Shor's algorithm is a threat specifically to this encryption. What Shor's algorithm does is it tries to find a periodicity when you divide up numbers, for example. So are you familiar with modulo, the modulo calculation?
No.
So modulo basically says there is a leftover, right? So if you say I divide 15 by a number, only integers, there's always some kind of left, or sometimes it's leftover, except I can exactly factorize it. So 15 divided by 2, right? It would be 7, but leftover 1.
Okay.
So you would say 15 modulo 2 is 1.
Okay. No.
And the interesting part is if you now take all the numbers from 1 to 15, and you always say modulo 15 this number, you start to get a periodicity in the leftovers, right? Except for when you have 3 and 5, right? So for with 3 and 5, basically, when you find out the periodicity of it, it tells you something about what kind of numbers are factorizing, basically my big number. And so when you know about periodicity and what kind of algorithms we have, there's something called the Fourier transformation. So this is something which we do constantly with our eyes, with our ears. We take just single air pressures and we transform it into a sound. And for quantum computing, there's something called quantum Fourier transformation. This is something that Shor's algorithm is using, and where in parallel it can investigate the periodicity, or we could say multiple frequencies, when we look at a certain number, and then find out basically that number, which helps us to factorize our input from the beginning. So Shor's algorithm is not like a one-shot solution. Quantum algorithms in general are not one-shot algorithms. So this is a little bit of a misconception. I can talk about it a little bit in a bit. But it just drastically speeds up the search for these numbers. And that's where, when we say this specific problem of factorization, Shor's algorithm can be a threat to it. Why this is maybe not that big of a problem is because a lot of things are changing, right? A lot of encryption starts to be changed into something which is quantum safe. And there is another algorithm which tries to give a solution for that, which is Grover's algorithm, which came about 2 years later in 96. So where Shor's algorithm is a solution to a very specific problem and only for that problem, Grover's algorithm tries to find the answer if you have a function. You don't know what that function is, but you know that for a given set of inputs, this function will give a true output once and a false output for everything else. Grover's algorithm can be helpful to find that one input which gives a true output. And this is often then compared to mining a little bit, right? Where you want to find the nonce, exactly, which gives you the correct hash, or the hash with the correct number of zeros, and how you can find that. But also Grover's algorithm, when you go into the details of it, I think it would be maybe too long for now, but so Grover's algorithm is not such a huge speed up like Shor's algorithm, but it's a quadratic speed up. So if you have an encryption which is 10 to the power of 256, by having quadratic speed up, you still need 10 to the power of 128 operations, which is an insanely high number. So even though there's a speed up, the encryption is so strong that the gross algorithm would still not be able to break those kind of things. So quantum algorithms will not be able to theoretically to break those things, except a few specific algorithms where they are very good. And practically talking about quantum computing, there are a lot of huge challenges to it, which where you look at when you look at the IBM roadmap, for example, what they plan when certain milestones come about. Right now, they have quantum computers with about 120 qubits.
Or 133. And I recently, by recently, I mean like yesterday, there were news. I am not sure how truthful this is, but people were writing on X, and they can write anything, right? So that's not necessarily true, but they wrote that 6-bit elliptic curve key broken using IBM's 133 qubit quantum computer.
A 6-bit elliptic curve key.
Yeah.
But what does a 6-bit elliptic curve key mean? Because this means you have 2 to the power of 6 minus 1. So the number, right, that you are basically decrypting here and finding here, I would have to check exactly what it is, if it is byte or bit. But bit would be very small to be a breakthrough. So these things you'd probably be able to, if it's just 6-bit, to crack with a conventional computer as well. So in general, what you do with if you write a quantum algorithm is you need still as many qubits to represent that number somehow, the number that you want to find. So if you look for a number between 1 and 1024, it's 10 bits basically. So you need 10 qubits to stay around to be able to crack it. Usually the numbers that you're looking for are huge, much bigger. So you need maybe 100, 200 qubits. And if you have an encryption, right now when we talk about IT development and public-private keys, you might have an encryption with 2,000 bits. So you need 2,000 qubits to be in a superposition with each other consistently throughout the run of the algorithm to then, in the end, find this state and find which qubit basically is how likely to be in zeros and one state to say that this is my number. And this has a lot of problems. Getting 2,000 qubits stable to be entangled over a longer period of time is very hard because there can always be decoherence. There can be some kind of, we need to make either, depending what kind of quantum computer we have ultra high vacuum, but there might be some kind of radiation which touches upon your setup, and then there's decoherence, it loses the entanglement properties. So all of that, and even then, so even when you manage to build a perfect quantum computer where you have 2,000 qubits which are isolated and in an entangled state or in a superposition, and you can run your algorithm, the outcome is always probabilistic. It's statistical. So you have to run this algorithm a lot of times, and then you get a statistical output that with a high probability, this is the correct answer. And what you gain from that is, okay, so now you just have to check maybe the most probable answers, which is much less, but you still have to run it a lot of times and make sure that you have this quantum entangled state. So, and those will be able to break much bigger encryptions. So I have to check the Twitter, but 6-bit in itself
not enough.
Should have been broken long time ago by the first quantum computers. Yes.
So it's basically the conclusion is that quantum's impact is quite overblown right now, right? Quantum's impact on Bitcoin and its encryption.
It is overblown, in my opinion. What I know about quantum computing and these things, there is still a lot to come. And one thing also has to be said about quantum computing is when you look at the algorithms which are available at this moment, it is very limited. So it could be that we just have not found that algorithm yet. And writing quantum algorithm is significantly harder than writing a conventional C or Python program. Because you, like every qubit that you take, it's not 0 and 1, but it can have a state arbitrarily something in between, and then it can also be entangled with other qubits at times. So writing algorithms which takes all of this into account is very hard. And what it comes down to in general is so physicists who follow this will know the Hamiltonian. So this is basically an operator, or there's also, depending which part of physics come from, a function expression, which describes the energy of a system. And what these quantum computers generally do, and what your task is, you take a real world problem and then you translate it into a Hamiltonian, which describes the energy state of all your qubits. And then you try to minimize it, right? Because in general, minimal energy positions in physics are the most stable ones. So everything tries to be in the most minimal state of energy. And in physics talk, these energies are eigenvalues of the Hamiltonian. And when you run your quantum algorithms, you try to get your quantum state, or the Hamiltonian, into like the lowest energy position. Then you read out the state of the quanti, the qubits, and then you get out the result that you want. And then you do this 5,000 times to get a statistical output there. And so there's so many problems still. And maybe there should be another way to describe Hamiltonians, another way to describe algorithms, which we don't have yet. So a lot of research has to be done. But at the moment, and for the time being, I don't see it coming and becoming a challenge, especially because a lot of problems that quantum computers are solving, partly AI now also tries to solve, like folding molecules, which is also an energy minimization task. Like, how is the molecule formed that it has the lowest state of energy? And this is something that AI can solve very, very well since about 1 or 2 years, since AlphaFold came out. And the question is there then a race between maybe AI finding these algorithms or AI finding solutions that we don't need quantum computers to run it? And the last point I want to say, because there's a lot of articles about quantum internet coming up, this will be a very essential part, because building like quantum computers, they always need a connection, how we can read out the qubit and get then an actual electrical signal out of it. So you need actual copper cables or gold cables, basically. We don't use copper there, which connect, and then they connect to the superconducting part via radio transmission mostly. So it works with a few qubits. You have seen maybe pictures of the machines where you have hundreds of cables going down and connecting to the superconductive little part. But imagine that with 1 million connections. It gets so much more harder to scale it, to build it. That's why it's important to be able to have distributed quantum computing. But that in itself has other set of problems. So it is a problem on the level of algorithms, research, engineering. And it's very exciting to see in which direction it will go, but not yet there, I think.
And by distributed, do you mean in a way decentralized? Or that's different?
Yeah, decentralized. So you don't have one quantum computer, but you might have...
but a network of those,
exactly,
right?
Just like supercomputer clusters, where you have something that might distribute jobs, except that for quantum computers, it will be important that the qubits on one machine can be entangled with qubits on another machine.
So they must be technically compatible.
Yes.
Yeah. And do you think that the current, because there are a lot of private companies, right, developing and working on this, do you think there is a scenario where they start cooperating?
Yes, I think there already are a few, but I can't think of any from top of my head. I mean, what companies like IBM, Google, and others are doing that have this kind of machines is trying to make them accessible, especially also for academia, exactly because we lack this research, this quantum algorithms. So IBM, you can go now to the IBM quantum platform and you get 10 free minutes on a quantum computer, which is amazing. It's not simulated. It's really a quantum computer that will run your algorithm, 10 minutes for free. So this is quite amazing that companies put these things out there. And it also shows that there's a lot of help needed to move these things forward.
What about quantum-proof Bitcoin? Do you have any thoughts on that?
So this will depend on the miners. I'm pretty sure that it will come. For now, I'm not 100% sure how quantum proof it is. So for sure, finding the hash and so on, it comes closer to Grover's algorithm. So I would say that nobody wants to pay a quantum computer, which is really expensive, to find these kind of numbers. So it's I think like certain miners, ASIC miners, are much more efficient to do that. When it comes about the wallets and the security of it, I also think like when the time is there, it will be able to evolve in that, because it's in the interest of everybody. So I don't see miners not going along with it. But there probably will need to be some kind of slight change from the addresses point of view.
So there will be at some point some epic change and change applied, some epic event where Bitcoin comes quantum proof, because it's like if it will exist, and there are a lot of people interested in that, it should go through that phase, I guess.
Yes.
Yeah,
yes,
it's inevitable to a certain extent. There is this resurgence in the idea of sound money. We have gold standard on one hand, and we have Bitcoin in the role of a national currency on the other. What do you think about this?
Yes. So when you think about money, or what is money, basically, there are a lot of definitions already out there. So in my opinion, it is something that should ensure that a nation or people of a nation can have a stable economic development, and to do that, to be able to do that, you need to be able to stabilize economy in times of crisis, in times of high unemployment, shocks, political shocks, like we had with the Ukraine war after the Russian aggression, where we saw Europe plunged into another energy crisis. So how do you deal with all of that? And what Bitcoin is, to me, it is still developing, because in the Bitcoin community, there's a lot of discussions. Is it a store of value? Is it something that we can use as for transacting more freely? Something that cannot be censored and that we can use in our daily life? Lightning Network is coming now about, that helps to make transactions much faster and more convenient between parties,
and cheaper as well,
and cheaper, drastically cheaper in certain situations. So, but the journey of Bitcoin has not yet ended. I think it is still in the beginning, and as it has become mainstream now. You see how many people are invested in it, and what place in society it will take is not yet clear to me at this moment. So many people say it's more a store of value, alternative to gold, and so on, with even a diminishing supply, because we ever only can lose Bitcoin by sending it to some address that we cannot control anymore, but not create more. However, for me, to this openness is also the question if Bitcoin stays at 21 million, right? There are already discussions of adding 3 zeros to it to make it easier because the price has gone up so much. Will there be ever a discussion, why not, if we found NGOs or good projects, could we not just make 10 more Bitcoin and fund this really good project with it? I think in the future there might be discussions like that as well, because this limit is a human set limit where the miners agreed to keep it, right? And if the community agrees to change it, it will change. So it's just an agreement of the miners. So for sound money, or money that fulfills the stabilizing criteria, I think here Bitcoin might not be a fit. And the reason is, when you look at crisis or big crisis that came about, like the Great Depression in the 1930s, one of the problems at the Great Depression was the gold standard of the US dollar at the time. So the government could not tackle the depression by infusing or doing quantitative easing, what the central banks would do nowadays, or infusing money into the system to support banks, to support companies, because they're the gold standard. And the consensus nowadays, economic consensus, is that this prolonged and made the Great Depression more severe. When you look at Corona crisis, what happened, or the economic crisis, where Obama found a solution or tried to find a solution, the buyout of all the banks. You might argue that this is unfair, and a lot of money went to the top people who gambled away your money with big investments and so on, who made money out of it. But this allowed the country to continue financially, right? Otherwise, like a major shutdown would have cost much more and would have caused much more severe damage. The same thing in Europe with the economic crisis. Having this flexibility for a government to interfere and say, now we are increasing or lowering the interest rates. Now we take, we accept that we might have higher inflation at some point because we flood the market with money. But this money that goes in, it will make sure that companies can lend money, jobs will not get lost because people can keep their jobs, banks will stay open and will stay liquid. This allows a country to adjust to crisis. So there are some countries which have their own fiat currency and are sovereign, and some countries don't. Like Japan has the Japanese yen, US has the US dollar, so they are basically sovereign. And Europe does not really have, because we have the EZB, right? And no country owns the EZB. But the EZB is basically a non-profit organization tasked with stability of the country, and basically by that making a sound euro or a sound money for us, with the task to keeping inflation rate at 2%, because 2% inflation rate means if you don't get a raise next year, it means in real value, you've received a cut of 2%. But this 2% allows the economy to have a little bit of a buffer. If things are a little bit bad, maybe we don't increase your salary that much, but with that, my company can buffer a little bit the economic downturn, and later when it gets better, maybe things change again. So that's why a little bit 2% inflation rate. And having the flexibility here makes sure that a country, a region can adjust to this crisis. So sound money in that sense for me is money that works for the people in terms of job stability, economic stability, planning stability into the future. Bitcoin in itself, what it is, I don't know yet. Ease of transaction and so on, all the values that it brings in is huge. And I still need to see basically where exactly it fits into the society and where it will then be most commonly used. Maybe just one point. I think for Bitcoin, when you look at the distribution, there is about 87% of the holders have 1 to 10 Bitcoin in their wallet. So it's not huge amounts. It's also not the tiny amounts, right? But it's somewhat distributed. Also about 60% of Bitcoin are in private hands, so not by funds or not by other places. So it's a quite well distributed currency, and the community will have to decide where it goes. But it's very interesting.
In a financial crisis scenario, could Bitcoin's fundamentals play a stabilizing role?
So for me, it is at the moment hard to imagine. If you, let's say, take a region and you reduce the possibility and ability of that region to adjust to a crisis by quantitative easing and changing the money supply in the system to ease the crisis, how it can help. I think we somewhat had it with the Great Depression. We had a gold standard, and we had a financial crisis with the gold standard, with sound money. And as I mentioned briefly before, it is something that contributed to making the crisis more severe. When we think about the European crisis, the crisis in Greece and of Southern European nations, we had something similar, right? There was a lot of complaint of what is going on with the ECB. And a lot of blame was also put on the euro because the weaker countries with less exports and less economic power are put into one pot with Germany, which is constantly exporting huge amounts, and where Germany is basically profiting from the lower value of the euro, because basically it's then averaged over all of Europe. So Germany is profiting from the euro, while the southern countries were not. And the southern countries were put into an economic crisis. A lot of reasons for that, of course, not necessarily Germany's fault, but they were in a crisis and they did not have the ability to help their own economy because the economy was basically bound to the euro. And the ECB, with the ECB policies, if they do quantitative easing and so on, afterwards they introduced a lot of different programs for helping out these countries, but they had basically the say of how can we help the country in this point. But they had the ability to do it because it was a tool in their hand to adjust. So if it's about having a national reserve in Bitcoin with a certain amount of finance that you can deploy at a certain time, which is maybe then also faster than gold reserves might change hands and gold transactions. So because reaction time matters a lot. So here I think that deploying it, selling it, so it then can have euros, US dollars, Japanese yen to tackle the crisis. I think here it could help because it eases the speed of transaction. But having a country having Bitcoin as the national currency, in which tax is paid, in which the entire financial transaction world is then done, it robs a government to help stabilize the countries in these times. And I think this is the problem. So maybe there is one thing which sometimes comes up when you see these educational videos about Bitcoin and national debt, where you say a bank gets 100 euros, keeps one, and then borrows 99 times another 100 euros, and it blows up the crisis. And Bitcoin is the solution for this because you cannot do it. But this is just half the story, because there's the ECB, there are the central banks, and the central banks, they just buy. They don't even need €1 to be in there to buy 400 euros government bonds. And they are the tools which basically do this. And for the European banks, there are very tough stress tests where they check what if GDP is decreasing with a certain rate? What if there's high unemployment rate which is sitting? What if a lot of credits default and a lot of companies can't pay back? Do you still have enough funds to cover these things? And there is a regulation called Basel III and many more, under which companies and banks are constantly tested for this thing to make sure that they have the financial strength to withstand economic downturns.
Is the idea of Bitcoin as a sovereign currency purely theoretical or something we could see tested in the future?
So it cannot work. The reason is sovereign currency means a country has control over the fiat currency and over the money supply on the market, which they increase, decrease by spending and by taxing. Bitcoin is not controllable by a nation. So Bitcoin cannot become the sovereign currency because they cannot control it. They can become the currency in which the country taxes, just like the euro is used by a lot of European countries for taxing and payments. But just like these European countries, those countries will not have control over it. And with the difference that the ECB or ECB can decide over interest rates with this non-profit mentality of the stability as the main purpose of the ECB. But what is the purpose of the Bitcoin miners? Is it the stability of the European market, the stability of the economy of that country, or is it mining returns, for example, right? Or what is at the heart of the miners or the community that decides how we are going to move on with Bitcoin? And
they are doing a business, right? They are doing business, and doing business assumes that they should produce returns.
Miners are doing, yes, exactly. So what if the Bitcoin price drops to €1 tomorrow for some reason? Like some whales decide we had enough, we're going to sell. And dropping to €1 is not unrealistic because price is always somewhat inelastic, depending on how much your order books are filled, right? And you in general see there's a lot of orders around your last prices, and then there's less and less orders. And that's where you also see certain price levels. If certain price levels are broken, then you see sometimes there's a jump down. So what if some whales decide to sell?
And they sell so much that there is nothing there in the order book, right?
Exactly.
For instance, and there is nothing, there is no safety net anyway.
Exactly. And then suddenly, because the last trade was now €10,000, there are a lot of margin calls to people who are leveraged. They also have to force sell their Bitcoin. And we see a raise down to €1. Okay, it's now a little bit fantasy, but also because order book liquidity is limited, only because we have 10 Bitcoin and it says €1 million, it doesn't mean that you can get €1 million out of the market at any time, because there's limited liquidity at all times. So if this happens, what happens to the country, right? It needs to export, import things suddenly. And it becomes much, much harder. So now the scenario against it is Bitcoin is traded worldwide, right? It's stabilized by other currencies. There will be arbitrage traders coming in, stabilizing the price and so on.
It's universally accepted, right? And recognized as well, which will take time anyways. So.
Exactly. So, but at some point, it's also very psychological because with gold, there is about 4,800 tons per year generated, about which 1,200 are recycled every year. Gold is used in satellites. Right? Gold is used for dentistry. Gold is used in electronics, in supercomputers, and so on. So there is like a specific use there, which is like a natural consumption of it constantly. If this would be true for Bitcoin, there would need to be some Bitcoin burning mechanism, right, for the consumption, which is somewhat like the miner fee, that you make a transaction, you do the miner fee. But if you're not transacting in Bitcoin, you can live completely out of the Bitcoin world, you're not consuming it. But you cannot live outside the gold world because you have a smartphone, which is gold. You have some cables probably have gold. So there's a natural need for gold for almost everything we do. And this is a little bit of a difference. And if Bitcoin reaches that, I think then it might change. But for now, for the stability, I think in terms of being a national currency, I don't see that it would contribute to the stability, the financial stability of the country or economic stability.
Do you think that probably Bitcoin was developed, because I heard about that too, was developed so that it would be easier to introduce people into the concept of CBDCs?
As opposed to Bitcoin, I see a really good use case for a decentralized euro, let's say a do euro, or how you call it, because this is something that can help these mechanisms. Why? If a central bank says, okay, quantitative easing, or we're going to introduce some money into the market, stabilize the economies, they can do it by reducing the interest rate so that banks can borrow from them more easily. Banks can also borrow from them short term when they run out of money, just for little liquidity crunches, or they buy bonds from governments, right? So they just make up money, they buy the bond from the government and thereby inject money to those governments. But in general, it's those big players who benefit from it, right? It's a bank getting the loan for zero interest rate from the central bank, and now they're loaning it out to households or to companies for a certain interest rate, which will include their fee, their handling fee, and so on, of course. With a decentralized or like a CBDC euro, the central bank could do it not by giving the money to the government or the banks, but by injecting your account with central bank euros and do quantity, because their goal is just to bring money into the market and strengthen the economies.
Then they don't need that intermediary anymore.
Exactly, they don't need the intermediary anymore. So this is a completely different use case than Bitcoin, but this is something where I see a stabilizing effect, which also benefits the people. So the people can benefit from the €0 interest rate that the ECB would give out.
Let's elaborate a bit more on Bitcoin and energy prices, right? On their coupling.
So I think when you look at Bitcoin, because Bitcoin might be denoted in euro, might be denoted in US dollars and so on, but it's available everywhere in the world. It's really easy accessible because it's completely digitalized. And what this also means that when you are mining Bitcoin, you can look worldwide, right? Because you can then sell Bitcoin anywhere to any customer, and you can pick your places where maybe electricity prices are the lowest, so you have the biggest profit. What this also means, on the other hand, that if Bitcoin prices increase, they will also become profitable in other regions. And suddenly, if Bitcoin is profitable basically in a certain region, let's say we are in Vienna here, and the electricity price is 20 cents per kilowatt hour. If Bitcoin reaches a value that for every kilowatt hour you get 25 cents of value out of mining, people would be stupid not to mine, right? I mean, everybody would put miner rigs in their apartments and start mining. If the market gets saturated, then what will happen with the energy price?
Exactly.
Demand increases, and at some point for everybody, the price will start to increase until it hits 25 cents per kilowatt hours. So in the end, the people footing the bill are the ones not mining. And this is just Austria. If you look at it worldwide, you see that the distribution of miners, mostly America, China, we have some, Russia, and so on. So that's already like the majority of mining hash rate that is out there. You don't see a lot of countries from Africa participating there, a lot of countries from the poorer regions of the world. You see a lot of countries where you have capital to do it. So it means that you have a little bit of an agglomeration, concentration of capital also. The people who have the capital to do it, implement it, build the miners, and they accumulate more capital through the mining. So it's not getting more decentralized, but it's getting more centralized, like where the mining power, where the capital is, and who benefits from Bitcoin as well. And then if at some point a Bitcoin reaches a certain price and somebody starts an operation in a poorer country, right, where maybe electricity price is very low, but also income is very low. What happens with the electricity price there? It starts to increase. It starts to couple to the Bitcoin price, because I'm going to mine as long as my miner produces more value than the electricity price costs me. So I demand in scarcity in electricity until we have again a match in both. And the effects it has on all the people there who might not have had the capital to start a mining operation, all normal households who don't have maybe wealth or struggle day by day basis, for them, the electricity prices are getting increased. So there again, they are footing the bill. So I think there's something to be taken account, that there are like effects when you start Bitcoin mining which go far beyond, especially if you do it en masse or on a huge scale on certain regions, which will impact a lot of people around there. And there might be some kind of trade-off that has to be found, because Bitcoin has to be decentralized. But on the other hand, the purpose of it is very noble, right? So decentralized, uncensorable, ease of transactions, bank the unbanked, and so on is mentioned a lot of times. But it turns out that maybe the damage it's doing to the unbanked, increase of electricity prices throughout, which they cannot live without. They can live without Bitcoin. They cannot live without electricity. Might be much bigger than the benefit it is offering at the end. And I don't have a solution to this, but it's just a thought to keep in mind, that equipping every household in Austria with Bitcoin miners is not necessarily the best solution for decentralization, but come with a lot of downsides for us. And again, very different in regions where we have an abundance of electricity.
And what do you think maybe in the future with the development of the renewables renewable sector, maybe this problem can be actually tackled effectively?
Absolutely. So we see already that there's a lot of countries which cover 100% of their electricity consumption with renewables. And I think Iceland is the highest with about 80% of their primary electricity, which means that any electricity, even mobility, transportation, 80% of that covered by renewable energy, which is a huge factor. Very different for most other countries worldwide. There's still a lot of fossil in the mix. But of course, if you get to that types of development, then the equations are very different as well. And again, there are some mining operations which are off-grid, which is not going to the grid, where you have maybe a geothermal setup somewhere and you use all the electric power to power your mining operations. Because it's off-grid, it's also not influencing the market prices or anything like that. So this is also very different. Also, it's easier to set up because you don't have to build the grid connections to those sites. Because grid connection itself is also very expensive and very hard because you basically connect to the public grid and could threaten the public grid by having a bad connection. So having these off-grid operations is a different topic from that. But as you say, if renewable mix is really high, if problems with primary consumption is solved, and if the national interest is such, then the situation is different.
And the tech is improving as well. Yeah,
exactly. Just because European has this special place that they don't have natural resources much, they depend a lot. So that's why they cannot do it. In the US, again, it's different because they cover themselves. There, it doesn't matter if it's coming from fossil fuels or whatever. They will just do the mining, the Bitcoin mining as well with a very profitable price. And no miner in Europe can basically compete with those prices most of the times. So this is there's a little bit of a nuance here.
What is the best place for listeners to follow your work, to learn more about what you are doing, right, and to connect with you?
Please connect with me on LinkedIn. I'm always available, very responsive, and especially to curious people who are looking for a nice conversation. I'm here based in Vienna, so you will find me at some events around in the energy space and the crypto space. We are also you can also check out websites of my company.
All links will be included in the descriptions, right?
Yes, thanks a lot. And so just reach out and we can have a coffee here and talk about some topics. So I'm looking forward.
Perfect. Thank you very much for joining me today.
Thanks a lot.
And sharing such thoughtful take on so many things: Bitcoin, energy markets, right, quantum computing, and whatnot. And to everyone listening or watching, if this gave you a different lens on energy grids, again, cryptography, AI, right, that should be mentioned, like, subscribe, and share this episode with someone curious.